The broadcast is now starting. All attendees are in listen-only mode.
All right, welcome everybody. Thank you for taking some time today to join me and hear about the IAMS Wealth Management Platform. This is Charles Heuring. I'm the Chief Operations Officer and Director of Business Development here at IAMS Wealth Management. And today I'm going to pretty much do what the webinar states. I'm going to give you a quick, hopefully about 30-minute rundown on our wealth management platform. I'm not going to go too in-depth on any specific aspect of it. I want to keep this more high-level kind of intro to the platform for anyone who might be curious. Hopefully, if you're interested, this is a little bit thought-provoking, or maybe answer some initial questions you might have to kind of want to take a deeper dive in. So by the end of this, if you have any questions, definitely feel free to type them in. If there's time, I will answer as many as I can that allows this still to go a reasonable amount of time. If you do have any additional questions beyond something that we're talking about here, that might be more specific to maybe an ancillary topic I quickly reference, or something that might be a custom question that might better fit your specific scenario. Our phone number is at the bottom of the screen. My team and I are more than happy to talk to you about anything in any way we might be able to ever help you. So definitely take note of that there, 888-255-7670. Same goes for our website. We actually do have a good amount of information publicly available on our website regarding not only our platform, but the systems and processes and different things we do for advisors at IAMS Wealth Management. So that's a good launch pad, so to speak, to learn more information there as well. So without further ado, we'll get rolling here again. Thanks for joining me today. No matter if you're here live or watching this on recording, I appreciate you giving me some time and learning more about our platform. So we'll kind of get moving here. Before we get going, I do just want to cover some quick disclosures. This presentation itself and recording is for financial professional use only. If any of our direct advisors happen to be watching this and you want to use some of this content in maybe client presentations or sales literature, let us know. We can make it client facing, but this itself is for financial professional use only. And this slide also gives me a quick chance to kind of reference IAMS Wealth Management as a whole and what we are. And what we are is an SEC registered investment advisory firm. So for those of you who only know IAMS from the insurance, annuity, Medicare space, we do have the financial investment arm, and that is IAMS Wealth Management, and that is what we're talking about today. So this is something that if you're interested in, there is registration requirements. It's not something you can just come off the street and join in on. There is some sort of prerequisite requirements. Typically, most frequently, people use a Series 65 license. But otherwise, typically designations like a CFP or CHFC will get things working for you as well. And we have a whole study program involved with getting started if you're intrigued. But we won't focus on that today. That's more for a one-off question. I just like to always reference that because I think it's good for people to know that might not be securities license already. What we're going to be talking about is securities related and just a way for you to diversify a little bit of what you're offering to clients. So a little backstory on kind of IAMS as a whole. That's our nice team photo we took a couple months back. That's the entire internal IAMS family that you're dealing with. That's going to be our annuity team, our life team, our wealth management team, accounting team, creative team. As you can see, we have a robust team here that's really designed to put the financial professional first. And that's what we're excited about. That's what brings us back to work every day and gets us excited. And you can see here, even just with the font, IAMS Wealth Management, we are a full service back office for financial advisors. Verbatim, I like to claim this because I know a lot of firms, they tout service, but really here, I think those of you who are listening who have maybe been with IAMS for a while can really echo that, service isn't just lip service at IAMS. It's really our bread and butter. It's what we've been doing for 33 years in the financial industry. No voicemail anytime you call. Within business hours, you're going to talk to a live person. You might not always get direct person you're looking for or the direct person that might be able to help you with your issue, but it's always going to be a live person, and they're always going to be able to get you to who you need to talk to. So in a world that's getting increasingly faster pace, I think there's a lot of good that comes from that, so we're proud of that fact. As a financial firm, IAMS Wealth Management in general, this kind of bottom paragraph describes what we provide advisors. Our value is simple. We take on the time-consuming tasks of portfolio construction, typical business processing, account trading, account billing, to really provide an investment advisor with more time to focus what's important to their business, which is building those relationships and maintaining relationships with clients and gathering new assets. I like to tell people, if you have time to do all those things on your own, you're really not reaching your full potential. And I think most people out there in the advisory space who would hear that would agree with that. So that's kind of the role that we fit. For the purposes of a platform, then moving forward, why are we here? Why is investment advising even an industry? Why, as a financial advisor, am I offering value to a client? Well, anytime anyone ever asks us that, I like to go through these next two slides, and that really kind of emphasizes why investment advice and investment platform is key to helping clients stay the course, accomplish their goals, and eventually, ideally, live a healthy, financially free retirement. So this stat, I think, is somewhat surprising to some people who might not know. It's from a recent Dalbar study. I put the link down there in the bottom, but if you'd like me to send you the direct report, definitely reach out to me directly. But over a 5-year period, and this is back from 2011 to 2015, the average equity investor underperformed the S&P 500 by about 5.5% a year. S&P was 12.6. The typical investor was about 6.9. This isn't because, only because maybe they're picking the wrong funds or doing anything like that. It's really because emotion is getting in the way. I think we know in investing what's comfortable is rarely profitable. This stat kind of rings that true. And then on the flip side, people are thinking, well, in fixed income, generally that's probably the lower volatility, the safer version. I'm sure, it was probably better. In fact, it actually wasn't. The average fixed income investor underperformed Barclays by 3.15% a year, missing out in literally 45% of the equity return during that time and 97% of the fixed income return during that time. And that is purely because emotion gets in the way, decisions get clouded, things of that nature. This is just kind of a telling stat of why the industry of investment advice is so key to helping retirees live successful retirements. Taking volatility kind of a step further and why an investment platform is key. I think maybe not so much recently, this has been a very volatile year so far, but in recent history, we've seen a pretty passive, tame market, all things considered, in the general grand scheme of market history. But volatility, year after year typically plays a major role. So I have our advisors ask clients, how often does a 5% drawdown occur in the market? For those of you who might not know what drawdown means, it's simply a 5% dip before the market reaches a new high and eclipses that dip. So if we're doing an advisor training event or I'm at a client seminar event, I usually like to field this question to an audience because it's fun to kind of hear guesses. Some people might say, oh, every year or every 20 months, but in a term of months, it actually is 3.3 months. So in a standard 12-month calendar year, you're going to get 3 to 4 or 5% drawdowns. Recently, we haven't seen that a ton, which I think has given maybe clients a misguided sense of what volatility really is. Going a step further, when you're talking about 10% and 20% and down the line, a 10% drawdown happens every year and a half. A 20% drawdown happens every 42 months. So if you're sitting across the table from a prospect or a client and they're having to see historical data that the market drops by 20% about every 3 years or so, it's going to make them really value how their investment dollars are allocated because as we talk, volatility is inevitable, and with volatility comes emotional decisions, which is why a platform is so key to kind of mitigate that. So we're going to talk about that a little bit further today. I guess I got a little ahead of myself here too, but if you're putting it into actual tangible dollar values, you can see how that can maybe be eye-opening for a client if they have $250,000 invested directly in a market and there's a 20% drawdown. That's $50,000 that evaporates. That's a lot that they have to then go ahead and make back up in return. So obviously it goes without saying, no investment is without some type of risk, no matter if you're going aggressive with equities or trying to be, conservative, low volatility with more fixed income. Nothing's ever foolproof. If it was, everyone would be doing it. But the goal of an investment strategy should be to design a solution customized to the amount of risk that your clients feel comfortable with. So that's how we've really developed our platform. And kind of to that end, we knew from these last two slides, the data and the information that you're seeing, we knew it was clear that we had to develop a platform back in 2017 when we started IAMS Wealth Management that was simple enough for an advisor to master, but still robust enough to meet a client's specific needs and mitigate, emotional investing and the pitfalls that can kind of come with that. So that kind of leads us to what we set out to do. IAMS Wealth Management as a whole, I think, has a unique value proposition just because we are familiar with the insurance space. You can see the first bullet point here. Our goal from day one was to develop a platform that can complement insurance business, something that can kind of nicely assimilate to the services you're already providing, but just simply expand upon that and just give you a better opportunity to provide more holistic service to the clients that you're already dealing with and make you more eligible to talk with prospects down the road and maybe a wider clientele and market base. That point bleeds right into point number two. We're trying to develop a platform that's not going to overhaul your existing business. I don't think anyone who is running their own business at the present moment likes the idea of having to overhaul, start from square one, and reframe everything. I don't think that's necessarily a great business idea from day one, but that's why we created the platform the way we did, because it's not going to overhaul anything what you're doing. You get out of it what you make it. We can make it as simple as possible or as complex as possible, and that's what we're going to talk about here in the next 20, 25 minutes or so. Lastly, we wanted to be able to develop a platform that's simple at its core, yet able to be built out. That kind of gets back to the point I just made. For someone who likes being kind of more of a hands-off advisor, we have solutions for you there. I know some of you listening might be an investment advisor or someone in the industry for 20, 25 years, has vast experience, managing portfolios. You actually enjoy waking up, reading market reports, charting signals, reading different market commentaries, and keeping up to speed. If that's your niche, we have a solution for that too, but we don't want to make it a one-size-fits-all. We want to make it simple at its core, but able to be built out. So we're going to start kind of telling you at least the various tiers that we have of our platform, and there's really three that comprise what we call the IAMS platform. The basic one is just the core platform. What we call kind of our intermediate one is the manager exchange, and then the most advanced one is going to be the premier advisor platform. And when I tell this to anyone who's learning about IAMS, how we operate, what we do, I try to explain it in kind of this format. Think of the IAMS Wealth Management core platform as the ground floor. This is going to be for someone who might be familiar with investment advising, maybe done it 5, 10 years, but they enjoy having a hands-off approach. Or on the flip side, maybe it's someone who just passed the Series 65 exam, is looking for a platform and a firm that can help kind of get them into the investment advice world, help them get their feet wet, get their feet under them as they enter into this new landscape of financial advising. That's what our core platform kind of hits home on. It says right here, it offers an advisor a simple, repeatable process for investing client assets, and utilizing essentially our pre-built IAMS design profiles gives advisors a hands-off approach to managing assets. So you're not going to be going in there every day making trades, anything like that. We're going to leave that to third-party money managers who are doing that for 40 hours a week. That's their bread and butter. That's their job. That's going to give you an opportunity to kind of have a hands-off approach where you can focus on the relationships with your clients, managing kind of those business tasks with us, and leave the investment advice or investment management, I guess, so to speak, in the hands of the third-party money managers. So we're going to talk about the core platform here in just a minute. The next tier up is what we call our manager exchange. It's simply put just a little bit more advanced version of what our core platform is. It kind of breaks down those IAMS design profiles and offers advisors a chance to really utilize the 30+ strategies we offer on our platform as they kind of design their own profiles. So we'll talk about that at length here in just a minute too. And then, as I mentioned, the Premier platform is really our most advanced platform. It's for those in the industry who are savvy at this. They've done it a while. They enjoy actually having that hands-on, tangible approach. It's something that maybe their clients have already become accustomed to. We, thanks to our back office technology and systems, have a way to make that pretty efficient for you. So that's probably what we'll talk about least today, just because that's really kind of a niche advisor that would maybe fit into that. But I like to reference it so everyone at least knows it's available. And if you're someone who might think that that's something that's a good fit for you, we'll touch on it briefly at the end. But I would encourage you to have a one-on-one discussion with me, and we can kind of go over logistics and how that works, and even go through a demo and whatnot. So now that you kind of have the table set for the 3 tiers of the platform, let's talk about each one individually a little bit more in depth. So we'll start with the core platform. This core platform really has three major pillars. One, we obviously want to focus on a suitable risk allocation. I think that's really priority one for anyone who's doing investment advice. You have to know your client, uh, know their risk tolerance, know kind of their needs, goals, objectives, things of that nature. So that way you can focus on a suitable risk allocation that meets a risk level that they're comfortable with and understand, and is designed to accomplish the goals that they have in place. So our core platform is designed to help you do that. Secondly, there's a focus on an investment process. Uh, you're not willy-nilly going in there buying and selling different stocks, doing your best. You're actually relying on third-party money managers who have a track record of doing this to actually manage the strategies. So these utilize institutional money managers, eliminating kind of your emotion in the process, and instead relying on historical data and algorithms of these managers that help invest when the odds are in our favor. So a lot of people like that hands-off approach of our core platform. And then lastly, I think it's always important to note that risk-adjusted performance is key. I think no matter what you're doing or what industry you're in, one of the worst things you can do is overpromise and underdeliver. So this core platform that we have really helps an advisor outline a risk-adjusted performance that the client can, I think, understand. Whereas they know that if they're watching the news and they're seeing the markets going up 1%, down 1%, but their portfolio is invested conservatively, they're probably not going to be seeing the same swings they might be seeing on mainstream news every night. So trying to find a way to frame that in a way that they understand how they're invested, what the goals are, what the risk-adjusted performance is going to help you do a better job as an advisor. And our core platform helps you do that. So really, this whole process starts with our client's risk assessment. So we have a simple 10-question questionnaire that assesses every client a risk score, and that risk score correlates to what we call one of our core profiles. So if you're thinking about a core profile, think of it as a blend of an equity and a fixed income portion of a money managed strategy. So these course allocations are constructed using two managed portfolios with the goal of matching a suitable risk level for a client. So I like to do this slide because it kind of illustrates really the simplicity of what the core platform is. And I think a lot of people, when they think of investment advice, think it needs to be over the top, robust, and wowing clients with bells and whistles. Truth be told, we're able to bake it down to something pretty simple here. Obviously, the underlying two strategies have a lot going on, but from a client's perspective and from an advisor's perspective, this is a pretty simple concept to understand and kind of master and really be comfortable with. So here, for example, we have a core profile 6. When you see them all together, we have profiles that span the whole entire risk spectrum. So profile 1, that's going to be your most conservative profile. That's going to be someone who on that risk questionnaire probably scores pretty low. Scoring low on that risk questionnaire either means that they have an extremely low tolerance for risk, or that they maybe have a short time horizon. It's going to be maybe funds they need sooner rather than later, things of that nature. Whereas if someone who scores higher, they might score closer to a profile 8, 9, or 10. What that means is that they likely have a longer time horizon. They're more tolerant for risk. They have more times for the money that they're investing to ride the ups and downs. And then we span everything in between. So our advisors like the fact that no matter what a client's risk tolerance is, they can really meet their need by using just the core system, a core system of equity and fixed income blended investments that can, ideally get the target returns that you're seeing here. I think, conservatively, you can get about 4% from a basic investment portfolio after fees. I think that's a fair level to kind of hopefully anticipate. Whereas as you go up the spectrum, you'd hope that, on an average year, you might get 8% from an aggressive investment. Obviously, some years are going to be better than others. That's just the nature of the beast when you're dealing with the stock market. But that's kind of the, I guess, ballpark goals that we're looking to accomplish with core profiles such as this. So as we go on here, you can see that even in the core profile sense, profiles can be designed to complement any client-specific need. So these profiles can really comprise those managers that we're talking about. As you can see, just from the whole spectrum, they can be preservation or growth-minded. We have managers that are more strategic, some that are more tactical. It kind of just depends on what type of advisor you are and what type of client and how their needs maybe necessitate management styles. We have some models that are solely ETF based. We have some that are more stock based. Again, it just depends on what type of manager or investment advisor you are, or what type of needs the client have. Same goes for going down the next couple. We have tax sensitive strategies, we have dividend driven strategies that we can help blend a core profile for you to really take a lot of the burden off of you as the advisor for someone who might be new to this and kind of looking for guidance, or someone who's been doing this for a while and would rather offset some of the responsibility on a firm like us. That's really what the core platform's for. So I know I kind of breezed through that fairly quickly, but it's really a simple process. I think this slide really tells you what you need to know is that just think of the core platform, think of 10 profiles that span the entire risk spectrum. If you have a client that's more aggressive, they're going to likely have more volatility, but they're likely going to have better returns. They're going to be on the profile 7, 8, 9, 10 end of the spectrum. Whereas if you have clients who are maybe a little bit older, have a shorter time horizon, lower tolerance for risk, they want less volatility, that's going to be someone that tends to score closer to a profile 1, 2, 3, 4, something that's going to be less fluctuating, but also not as high of returns as if you're fully in the equity market. So hopefully that is a pretty good synopsis of the core platform there. Let's take it a step further and talk kind of step 2, what we call the IAMS Manager Exchange. I would say advisors who are with us for maybe 6 months to a year start to maybe graduate from the core platform into the Manager Exchange as they get more familiar with the whole investment advice landscape and they get more familiar with our managers. And it's kind of a natural progression that we like to see because we think it's good to have a pretty hands-on approach. And I think the more you master a platform, the better you're going to be at getting out there, better servicing your clients, and finding more ways to attract prospects. So as far as the Manager Exchange goes, we have a couple different ways to go about it. On the left-hand side, we have what we call kind of direct money management, using third-party managers through our platform. Our platform custodies at TD Ameritrade, and we actually buy, sell, trade, bill these accounts on behalf of our advisors. These are just a rundown of some of the managers that we have, going through, Alpha DNA, First Trust, Black Creek, Tiber Kosmala, Fusion Capital Management, Calton, Brookmont Capital Management, Lear, and Optimus. We do have a few more. This is kind of our core group of direct money managers that we have on our platform. Some of those I'm sure you've probably heard of. I'm sure some of those are ones that are new to you. They each kind of fit a specific need for what our platform offers. And if I had hours of time today, I'd go through and kind of list everyone one by one for you. But for the sake of time, I like to just show any prospective advisors this, just so that way you kind of have a basic understanding and grasp of what you have access to as an advisor with IAMS Wealth Management. I will highlight one manager later, but we'll get to that. On the right-hand side of the screen, though, you're also seeing the various partnerships that we have through either selling agreements or co-advisory agreements. A lot of people out there, I'm sure, know SEI, know Equus. There's some of the larger TAMPs out there in the industry. They have their own platforms themselves. We do offer advisors access to that. So if you're an advisor listening and already have funds with either of those, we can still maintain that access for you. I think one that maybe fewer people know about is the Pacific Financial Group. That's been a great partner of ours just because they have a unique 401k concept where you can actually, in some 401k plans, actually manage client assets in those plans without moving the funds out of the plan. And that's likely a story your clients haven't heard before. It's a service they've maybe never been offered. And it's a good way to get your foot in the door and then be that first call whenever the time comes to roll that out. So we're happy with that partnership there with the Pacific Financial Group. And then lastly, I just like talking about Mass Mutual and John Hancock just because they've been good partners for 401k plans that we have. So a lot of advisors say, well, if I come to IAMS Wealth Management, can I work with individuals? Absolutely. And then they say, well, can I work with 401k plans, group plans? Yes, you can. We have the partnerships in place to give you access to that. And that's just via our Manager Exchange. So at a high level, that's kind of what you're looking at as far as the kind of universe of managers go on the Manager Exchange. When you see it listed out here, I know this is kind of a lot to take in at once, but this is actually a marketing piece that our advisors have. It breaks down our managers by the style of how they invest, the category, whether they're fixed income, alternatives, or equity, and even breaks it down by class. And you can see actual model names, a client's risk level, minimums, things of that nature. So again, this isn't something that we expect an advisor brand new with us to watch once and then understand. This is something like anything does, comes with time. But I just like showing this because it does give you kind of a good snapshot of what it looks like as you're slowly graduating up the tier of a platform, getting a little bit more robust knowledge gives you these more robust capabilities. So that's kind of a list of our managers there. Going back kind of how the graph or the charts work on the previous page, I like to think of it almost like this image, just because I think this really boils it down simply. You still have your risk-based core allocations. It's still going to start with that risk questionnaire and risk tolerance. We still want that to still probably be the blend of the equity and fixed income. But all we're doing is allowing advisors to then go in and maybe pick the equity manager that best fits the client's individual situation, best fit the fixed income allocation that best fits the client situation, actually take a little bit more ownership over blending those profiles. Obviously, we see every trade that goes through as a firm, so we're not expecting advisors to be doing this on their own and hoping they're doing things by the book. I mean, we're there every step of the way. We oversee every trade that goes through. If everything seems like it was done incorrectly or inadvertently or an error, we always uh, take the road of asking questions rather than just letting something go by and assuming things. So it's I guess I just want to state this because I don't want anyone out there to think you're on an island if you're using the manager exchange. You still have all the support that you do on the core platform on the manager exchange. You just do it with a little bit more of your own ability to be hands-on. The nice thing about this is that you actually can even add in satellite-based allocations. All this is just little other pieces of the pie that you can kind of blend in with maybe the equity and the fixed income to make it a more customized solution for clients. To get into the weeds a little bit, in any individual account, we can actually use up to 4 strategies. So if we're getting a little bit complex, you can use 4 different managers in any account, 4 different sleeves, I guess, for anyone who's technical with kind of the investment landscape. But something along those lines could be done, and this means maybe you still have your fixed income and your equity, but then maybe you throw in some safety. Maybe you're doing an annuity. I know a lot of people listening are probably familiar with annuities. Some of those can be outside the account, more just standard annuities. As time and time goes on, obviously more fee-based annuities are becoming prevalent, and that can actually be part of the portfolio as well, just direct. And kind of going down the list here, just for the sake of time, for someone who has an income need, maybe you throw in a blend of dividend stocks. For someone who's looking for, maybe a 10% piece of the portfolio that's either a growth of capital or in real estate, we have ways to make that work. And I just like saying this because I don't want anyone to maybe misconstrue the idea that the platform is just simple and it's fixed and it is what it is. If you're using the Manager Exchange, you really can take full ownership on a client-by-client basis on how you want to manage the assets and how you want to best meet their needs. So as I mentioned earlier, I wanted to talk about one manager quickly. That is actually going to be Black Creek. For those of you listening who don't know who Black Creek is, they're kind of our go-to real estate partner. Some people who might be new to investing think, real estate, what's that kind of have to do with investing? Well, in U.S. market cap, commercial real estate is actually the 3rd largest asset class. With that said, I think a lot of advisors might not touch it, and I think even more clients don't realize that they're not exposed to it or don't even realize they can be. So what Black Creek can help our advisors do and clients do is get access to institutional level core real estate at the client level. It gives access to institutional core level real estate funds with maybe $1 million minimums themselves for about a $3,000 minimum to the end client. So I like to talk to our advisors about this because I think it's a great differentiator for them. I think it's a good conversation starter and likely something clients haven't heard elsewhere. And the talking point, I think, is simple. If you're talking about any institutions out there, think about maybe college endowment funds or pension funds, they are going to have some sort of portion allocated to real estate. I think on average, it's about 10%, just ballparking it. Whereas the average end client, average Joe you're meeting on the street, has 0. So as time goes on, I think this is like a good selling tool that our advisors can incorporate into maybe the manager exchange, put a piece in the pie of something like this, create a selling niche that maybe clients aren't hearing elsewhere, and end up, giving clients maybe something that is a better fit just because of that last point that's made there. Because when you're talking about a typical 60-40 portfolio with 60% in equities, 40% in fixed income, when you pair that up with 10% that's in core real estate, historically, we have sales tools that can illustrate this. Historically, the performance is going to be a little bit better with lower volatility. So without trying to get in the weeds too much, I do like just at least giving a little nugget on one of the managers we have on the manager exchange there. So lastly, the last tier that we mentioned was just the Premier Advisor platform. This is something that kind of came to be based off of talking to advisors who have been doing this a while, might be familiar with both the RIA and the broker-dealer landscape, and they're accustomed to actually trading their own portfolios, doing their own research, and their clients are used to it, and that's actually what they prefer. I think for a certain level of advisor out there, I think that's a great thing to be doing. Obviously, as I'm sure people listening can know, some people would have no interest in ever doing that. Some people can't imagine not doing it. So we just want to make sure we have a solution on our platform that gives an advisor who's qualified and has the want to do something of that nature, the capability to do it. So we're going to have a few slides briefly here on just the Premier Advisor platform. So for someone who wants to actually get down to the client level and manage their own models, this would give you access to do so. It's going to mirror very similarly the manager exchange. You still have access to all those managers, but all you would be doing is updating actually your own models in conjunction with those that you can use as you see fit. So if you have your own equity model that you're kind of managing based off of your own research, we can help you get that built in for your own system, likely increase your efficiencies in the trading and how you're managing accounts, because you can actually update accounts all at once if you're doing a model rebalance, depending on if you do a quarterly rebalance, monthly, whatever that might be. Again, we're getting into a very specific talk here that is probably better for a one-off setting, but I just like to mention this at a high level. You get access to our additional tools where you can trade at the household level for a client, things like that. So you do get everything that a typical IAMS advisor gets. All you do is just get a little bit more features involved because of that Premier platform access. As you can probably expect, though, more capabilities and more ability to be hands-on with the investment does come with a little higher compliance bar, as to be expected. It does require a little bit higher qualification level. We need to have a letter of understanding on file. We need to have a track record of management experience, a good number of assets to kind of reinforce that track record, a call with our IAMS investment team just to kind of vet out your own trading methodologies and how you go about doing your research and things like that. And lastly, just the participation in an annual compliance event specifically for Premier advisors. And I don't think any of that is too much to ask of anyone who's looking for these capabilities. I think that's probably assumed at this point when you're dealing with the financial industry, especially on a fee-based fiduciary side. So I do just like to mention that as one of the things that comes along with the Premier platform. So I think I did a pretty good job of actually staying on about a half hour, which is sometimes, rare when you kind of come into one of these presentations. So I appreciate you all sticking with me. I am going to open up the floor for some questions here for anyone who might have any. Just take a couple minutes here answering those. A couple people are asking about account minimum size. That's a good question. Our ADV or our compliance documents state that our account minimum is 25,000. That can be waived in certain scenarios, but we typically like to keep it at that just for compliance purposes, and I think that's just a good level to set. One instance maybe we'd waive that would be for maybe a married couple you have that has a joint account with you. They each have their individual accounts with you, but maybe they have a child who's looking to start maybe a Roth IRA that they're depositing $5,000 in to start. Obviously, that doesn't meet the $25,000 minimum, but it still, obviously is important to the whole client dynamic, the household relationship. That'd be an instance where we'd go ahead and work on that, but that's a case-by-case basis. Next question here, it's looking, someone wants to know, what kind of does training look like on getting up to speed on this? That's a great question. So let's take the question from the lens of someone who's never maybe done investment advice before, who's coming over from maybe the insurance side, passing the Series 65, how do I get up to speed? Well, one, we do have quarterly advisor training events that are designed to really be kind of a 2-day crash course, spending about a total of 12 hours talking about, what I just spoke about in 30 and more, just to get you up to speed on our various systems, our platform, our marketing materials, how things work, sales ideas, how to incorporate, assets under management into your practice. We cover all that in the 2-day sessions. that's probably what we lean on for our primary training methods. Otherwise, beyond that, we do have our systems in place that actually have training videos. So there's 21 training videos in our systems that get you familiarized with our systems and how to go in and open a new account, how to trade an account, how to run a client report, things of that nature, just the necessary business tasks to kind of running an advisory business. We get you up to speed on that. And then lastly, our phone is always an option for you. We always like to tell our advisors that we are here to be your resource. So call anytime you have questions. It's not uncommon for our team to spend a half hour or an hour at a time doing actually a web demo screen share, showing you how some of the systems work, or maybe going through an investment proposal with you your first couple times just to get you ready for your appointments. And there's even been times I've actually hopped on client calls with advisors their first couple times just because it gives them a little bit more confidence. And I think from the client's perspective, I don't think it does any harm having someone from the home office involved in kind of the sales process, just because I think it just adds credibility. Plus it also, likely makes them feel a little bit more at ease. Another person's asking, 65 questions, Series 65 exam questions. So we do have a study program here that we kind of try to make as simplified as possible. That is through Kaplan. We have a institutional partnership with them. We're a licensed reseller of their materials. We do get a slight discount on their testing materials for the Series 65. So to do the self-study option through IAMS Wealth Management with the materials and the exam fee combined, the exam itself is about $175. It costs $400. We can get you that package rolling, get you signed up for the exam, and really walk you through the whole process. I think at any given time, we probably have 10 to 15 people that are studying in some capacity. I don't want to sugarcoat it. I mean, it's obviously a difficult test. I personally like that it's a difficult test because I think it is, a commitment to make to go out and achieve a securities license like that. I think it's a commitment to your business. I think it's a commitment to the service you're giving to your clients. But on the other end, it's not too difficult to pass. I mean, we have 41 advisors as of this recording and growing. So it's definitely doable. I think the pass rate the first time is probably, if I had to ballpark it, about 50%. And then from there, I think it's about 80%. So I think it's a key thing just to make sure that when you're studying, you take proper amount of time, you take the whole study process seriously. And I'm more than happy to actually even help you plan out a study calendar, how many hours you're looking to spend a week, maybe what 30 to 45 day time frame you're looking to maybe pencil this in for as the study process goes on. Everything along those lines, I'm happy to help, however I can. I think we have enough time for probably one more question, and if there's some I don't get to, I'll make sure I follow up with each of you individually. The next one's more revolving around compliance questions. This individual just has had issues with compliance departments in the past, and they just want to know how an RIA kind of works. And that's a good question. I think that's one of the differentiating points between maybe an RIA and a broker-dealer landscape. For those of you who might not completely know the ins and outs of the differences, an RIA or a registered investment advisor, we report to the SEC. We're under SEC oversight. The SEC oversees IAMS Wealth Management, or our firm here directly, and then it's our responsibility as a firm to oversee our advisors all across the country. So that's kind of in bare bones form, kind of how the tree of compliance works in that regard. On the broker-dealer side, that falls more under FINRA jurisdiction. That's going to be more directly reporting to FINRA. They can do various surprise audits there on that side of the fence. Whereas for us, if the SEC, anytime they want to audit us, they've obviously already checked in with us a couple times, as they will eventually again. They come to our home office, so they're not going to knock on your door and need your books and records directly. They'll come directly to us. So some people like the idea of kind of being at least maybe one more step removed from the direct reporting of that. And that's kind of one of the services we provide. We take on kind of that direct compliance oversight and contact responsibility. So hopefully that answers that question. So with that, again, for the sake of time, I'll probably just tie things off here. I do want to thank you all again for taking the time to join me today. No matter if you're here live and signing off, or if you're watching this down the line with a recording, always feel welcome to reach out. Again, my name is Charles Heuring. I'm happy to help you best I can via the phone number below, Otherwise, even reply to the email you get with the invite to this webinar, and I'll answer your questions that way too. I think like I said at the beginning, I think are a unique fit for financial advisors that might be doing a chunk of their business in the annuity landscape. I think we make life a little bit easier for them than maybe other firms can. So if there's anything that you want to talk about pertinent to your specific scenario and how we can make maybe your life easier, maybe get you paid a little bit more, get your business working a little bit more efficiently, I'm happy to help answer those questions. So with that said, enjoy the rest of your day. Thank you again for all your time, and we'll be talking soon. Thanks, everybody.